Bank of America is one of the biggest and most popular financial institutions in the United States. We'll expose a stress test of the corporation, taking into account the most important features of it. First of all, Bank of America Corporation has the following business segments: consumer banking, including deposits and consumer lending, global wealth and investment management, global banking, global markets, and the all other segment. The following graphs will show the evolution of some of Bank of America's main accounts. As you can perceive in the blue graphs, two of the main assets of the company, net loans and commercial and industrial loans, are both following an increasing trend since 2015. Commercial loans, mortgages, and consumer loans represent a significant amount of the total assets of the company. The composition of liabilities consists of two main accounts: deposits and the total debt emitted by Bank of America. The overall liabilities of the corporation follow an increasing pattern in the last years. The net income available to common stockholders also follow an increasing pattern until last year. All these loans conforming the corporation asset portfolio needed competent risk management to assess them. The following diagram shows the structure of the risk management governance of Bank of America. The board of directors is the most important entity, and board committees and management committees help them monitor different types of risk that could affect the company. Bank of America catalogs 7 different types of risk that are assessed by different board and management committees. In the last years, cybersecurity risk has also risen in importance as part of the operational risk of the corporation.
Bank of America covers Tier 1 ratio without any problem because they had a 12.6% ratio in 2019, and the minimum must be at least 6% according to Basel III. Following with the total capital ratio, Bank of America had a coverage of 14.8% in the same year, while the minimum Basel III set is 8%. Finally, the American bank had a leverage ratio of 7.9% during 2019, exceeding the minimum requirement by 4.9%. It can be said that Bank of America is under the legal requirements of Basel III without any problem. As we can see, Bank of America is a very aggressive bank. They are very competitive and they want to have as much market share as possible. The strategy of we must grow and win in the market, no excuses, is a little bit disturbing. With it, they communicate to other banks that they will go anywhere needed. It doesn't matter how risky it might be. Another of their strategies is we must grow in a sustainable manner. This requires progress across 3 dimensions: sharing their success with the community, trying to be a great place to work for their employees, and driving operational excellence. Another important point to analyze is that they follow the current trends in order to attract more clients. Innovating considerably in fintech. Bank of America pursues forward-thinking solutions to enable them to keep leadership in aiding people to live better financial lives, as well as companies and institutional investors improve their financial performance. A good example of this is Erica, the industry's first artificial intelligence-driven virtual assistant to help clients manage their finance, and Merrill Guiding Investing, which is an online advisory program that offers portfolio management strategies.
Due to this year's global recession caused by COVID-19 pandemic, 2020 has been a year of contraction for many companies and economies worldwide, creating negative side effects in the US prominently, such as a steep decrease in the federal funds rate from their highest point of 1.58% in February to 0.09% as of November 23, 2020. And now officials expect to maintain levels within 0% to 0.25% until late 2023. A rise in the unemployment rate from the lowest point of 3.50 in February to their highest point of 14.6% in April, showing constant but no steeper decreases. And the inflation rate has slowed down, even showing signs of inflation during some months of the year. All these current conditions pose a challenge for the banking industry in the coming year, as the interest rate and the inflation rate are expected to display low but increasing rates in the upcoming months. Additionally, spikes in daily, weekly, and monthly infection cases pump a lot of economic uncertainty for the coming months. These cases are expected to decrease until after the spending season in January 2021. Based on these conditions and market expectations, it is our confident prediction that Bank of America will be within the few banks in the United States to show annual growth, however low that might be. This prediction depends on the accomplishments of some expectations, such as inflation showing a promising growth throughout 2021's first quarter. The federal interest rate keeping a range between 0.10% and 0.25% during the first 2 quarters of 2021. A vaccine for COVID-19 is approved and by late 2020 or early months of 2021. so that its distribution may begin before the end of this first quarter. The stimulus package of the pandemic approved and set in motion before the end of 2020 or within the first weeks of 2021. To sum up, in our point of view, the overall Bank of America strategy as an aggressive bank makes it a resilient and highly effective company to withstand adverse economic scenarios 2021 might present. This aggressiveness is visible in all the company tiers, ranging from their management structure and financial statements, demonstrating that this attitude does not mean an impasse or setback for innovation or risk management. On the contrary, we believe that these business segments are the most profited by this attitude, and in turn, the segments driving Bank of America into the future. Thank you.